The New Zealand government thinks inside the box. They're going to ask the private banks to create some money, which is what banks do, and lend it to them. In return, they'll give the banks an IOU, called a bond. The government will then have some money to spend, to support people, and activity, in the economy. Treasury predicts that the amount of money the government will need to borrow, is, about $200 billion, by 2024. That's the amount of money that will go through this process, and taxpayers will pay interest on it. About $5 billion in interest, every year, to the banks. But wait! The government owns their own bank. It's called the Reserve Bank of New Zealand. The Reserve Bank is creating money too. Just like the private banks do. Now, you'd think that money would be going straight to the government, to put into the economy. But no! It's going to the private banks to buy some of the government bonds, or IOUs, they've already got. This is what's called quantitative easing, or QE. It amounts to about $60 billion so far this year. So, the money that's going into the economy has been borrowed from the private banks, in exchange for a government bond, or IOU. And it will have to be repaid by taxpayers, with interest, and that means less money for hospitals, schools, roads and water supplies. Meanwhile, the government's own bank is creating $60 billion of money that's going to those private banks. Is that crazy or what? At Social Credit, our thinking's not confined to this box. We'll have the Treasury fund the government directly. Doing it this way will mean you, your children, and grandchildren won't have any interest, or debt, to repay. All your tax money will go where it's supposed to, into hospitals, schools, housing, environment, and infrastructure. Things that are good for Kiwis. Vote Social Credit.